What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock, and I'm going to be giving you 4 reasons why you should be buying the SoFi stock right now at these levels. It has been a long journey. Remember, guys, this stock has been on the market, publicly traded for 2.5 years, and it has been a non-stop sell-off for a pretty long time, and finally right now we're starting to get a little bit of a recovery, but this stock is still down 70% or more from the highs. And we've been following this stock since the IPO SPAC route day one. And if you search SoFi stock at the top of YouTube, StockGoat is the top channel for this search term. Like I said, guys, we've put over 300 videos out on the SoFi stock. So if you find any of this information useful, be sure to subscribe to the channel. We will be keeping you updated daily on all of the breaking news. We're trying to get the channel to 15,000 subscribers in the next couple of months, so be sure to smash the like button for the YouTube algorithm, and don't forget to drop a comment. I'm going to be commenting back to as many people as I can. You're really going to enjoy this video. Let's get into it. All right, guys, you can see the SoFi stock was IPO'd, around December 4th. They went the SPAC route, so we are still down 20%. From the SPAC IPO date. I mean, this is 2.5 years of non-stop, declines. In this video, when I give you the 4 reasons of why you should be buying the SoFi stock right now, you're going to see inside of this video that what's going on inside of the company's fundamentals is the exact opposite as the chart. Also, SoFi is one of the most shorted stocks inside of the market right now, anywhere between, the 14 to 17% range, the past month or two. And it's also been increasing as well, the past couple of weeks, which is insane seeing, the good news that we've been getting. The first thing we're going to be talking about today is stock-based compensation. Stock-based compensation, also called share-based compensation, refers to the rewards given by the company to its employees by way of giving them the equity ownership rights in the company with the motive of aligning the interests of the management. We've seen this happen. SoFi has been bringing over some heavy hitters from, other companies, USAA, Google, etc., and they've been getting paid out in stock-based compensation. We want to make sure that the stock-based compensation, isn't, out of whack or out of line like some other companies that, their stock-based compensation and their losses are just, massively increasing and, have no way of ever going backwards. I mean, every company does it. You got Snapchat, Roblox, Uber, Upstart, so many companies out there, but we want to make sure the stock-based compensation is in line. And as you can see, guys, this article was written May 7, 2022. You have been warned, and SoFi has a huge stock-based compensation. So this has been going on for, years. Finally, right about now, it's finally starting to decline, these bearish headlines, because it looks like SoFi is going into the right direction. We're going to take a look at that right now in some of the chart. So the stock-based compensation is right here. This is the numbers we're going to be looking at. We're only going to look at Q1 2022 and forward. So we could see at Q1 2022 is about 77 million. Q2 2022, 80 million, so it inclined, and then it finally started declining as of Q3 2022, 77 million, 70 million in Q4, and then we had the lowest in about 4 or 5 quarters, 64 million. So you can see we're starting to get a small pullback on the stock-based compensation. But what you really want to look at is stock-based compensation to EBITDA, because that's the metric SoFi is valuing their profits on right now. And you can see Q1 2022 EBITDA was about 8 million, Q2 20 million. So EBITDA is also increasing very quickly, which is what you want to see, while the stock-based compensation is coming down 44 million. 70 million and then 75 million as of the last quarter. So these are the 2 metrics we're going to be looking at. So this is SBC, guys, and these are the numbers, and we're going to be comparing each quarter to each quarter of EBITDA. So stock-based compensation versus EBITDA, earnings before interest, tax, depreciation, amortization. We're going to be looking at these 2 to make sure, we're going into the right direction. So you can see as of Q1, stock-based compensation was 863% over EBITDA profits. That's why you were getting those bear articles. So maybe they were right and just thought this was going to be, a greedy management team taking massive profits on the stock, not trying to take care of, shareholders. But you can see in Q2, it dropped to 300% over EBITDA profits. So you got the 80 million stock-based compensation versus 20 million EBITDA. Q3 moving forward, it moved to 75% over EBITDA profits. Q4, 0%. It was literally a break even 70 million versus 70 million EBITDA. And then our recent quarter, guys, stock-based compensation is finally under EBITDA profits of 14%. So finally, we made it into the profit territory of EBITDA versus stock-based compensation. But you can see, guys, it was out of control the past couple of quarters. So maybe the bears were correct, but I'm going to tell you right now, those articles, it was probably 100 to a couple of hundred. Those articles aren't really coming around any longer, and you can see that's because SoFi has been doing the right thing. And you never know, guys. Maybe EBITDA is going to double stock-based compensation in the next 2 to 3 quarters, and that's what you want to see. So it took a long time. That is the first reason why you should be buying SoFi stock right now. Stock-based compensation has finally come down to realistic levels versus EBITDA. As you can see, they are finally over stock-based compensation for EBITDA. And the second reason why you should be buying SoFi right now is its brand awareness is absolutely skyrocketing. And we're going to show you the #1 tool that I believe is, making that happen. And that is the SoFi Stadium, guys, the NFL stadium for the LA Rams and the LA Chargers. SoFi Stadium naming rights deal to total $625 million by the end of the contract. And you can see here the stadium curse. Naming deals just continue to go bust. CMGI Field bankrupt, Air Canada, Enron, the National Car Rental Center, PSIN Net, United Center. So there's just so many of these stadiums that have failed, and we need to make sure that SoFi is actually going to profit off of this in the future. I mean, we could see that the EBITDA is looking really good, and what is causing that EBITDA to skyrocket? Of course, it's the bank charter that SoFi got. But, there's things you can also look at. You can see here September 12th, 2021 was the first SoFi Stadium game. So it took a while. This thing had to get built. You had the coronavirus. So 2021 September, remember that date. So this is the term SoFi Bank on Google Trends over the last 5 years. And you can see from 2018, 2019, 2020, and even 2021, it was pretty slow. You didn't see any real game. But guys, take a look at this. As soon as we get to September, which is the first game of the NFL SoFi Stadium where they got the naming rights for 20 years, it has just taken off for the past 2 years, guys. Brand awareness for SoFi Bank has skyrocketed as of the first game of the NFL game for SoFi Stadium, guys. Look at that. Just absolutely exploded. So brand awareness is skyrocketing, and that's why you see more and more people switching over to SoFi because they keep seeing it, hearing it everywhere. The stadium, the commercials, it's just a compounding effect. And you can see here on Google Trends, it is working on a 5-year chart. Brand awareness is doing absolutely wonderful. So maybe this 20-year stadium deal is about to pay off in year 3. That's how fast it is about to pay off because SoFi is heading towards massive profits very soon. So this is awesome. And I just think it is totally different from all of these other stadiums that collapse, companies that collapse on the stadium, the naming rights, because this product, you can get to this product in as little as 3 seconds as, just downloading it. A simple download and you're going to be getting this product. It's different with those stadiums marketing, different products inside of stores and also, airlines, those products you can't get to immediately, with a simple download. There's never really been an NFL stadium that has a big app that you can get to. So this is almost like the perfect thing to market on a NFL stadium inside of LA. So as you guys can see, it is working. So the brand awareness is our #2. All right, guys, and we're going to keep it pretty simple on the third reason why you should be buying SoFi, but this is very important, don't forget, and that is going to be members. And of course, we're just going to be starting out at Q1 2022. You can see they have just had nonstop consistent growth of 408,000, 450, 424, 480, and 443. 400,000 members every single quarter for the past 5 quarters. Yes, the growth is slowing down a little, but of course, it's going to slow down a little because SoFi is now at 5.6 million members. But the consistent growth is something that I like, but I've always wondered and always guessed, can they accelerate this growth? Is there a way to do that? And I believe the way that they are going to do that is when they get to a profit, they can turn on more of a marketing ad spend, spending those profit dollars back into marketing and get this to start accelerating higher. And you can see here on Tevis, Fun of Investing Twitter, you can see he quoted what the CEO of SoFi was quoting. By 2024, member growth could double to 800,000 to potentially 1 million members per quarter. That would be an insane acceleration, seeing that they've just been at 400,000 for the past 1 to 2 years. That would be doubling member growth. That could be an extreme catalyst. A lot of companies, growth peaks and slows down. SoFi, after being on the public markets for 2.5 years, decides that they are able to finally ramp up and potentially double member growth. You got to see what type of numbers we're going to be looking at by the end of 2024. You can see member growth has stayed consistent, just like what we've seen on the charts: 400,000, 450, 424, 484, 433, and now we're at 5.7 million members. But guys, if we just finish out this year with 400, 400, and 400,000, that's going to put the end of this year at 6.9 million members. But if we get that acceleration that the CEO, who has been buying this stock hand over fist for the past year, says, I'm going to go with him, and I believe that we're going to be able to do it. 800,000 for the next 4 quarters. That puts us at 10.1 million members by the end of 2024. Guys, we are not that far away from 2024. We're already halfway done with 2023. You need to give this stock a little bit of time, and I have, a 5 to 10 year horizon on this stock. If you still want to make some profits and gains, I believe, a 1 to 1.5 year investment is going to be very fruitful for you guys. Look at the member growth. Consistent for 2 years on the public markets. Now we're going to ramp up into doubling, the user growth quarter over quarter. This is exactly what I'm looking for in a growth stock. Accelerating user growth, not just going backwards, moving forward. This is huge, guys, and that's why member growth is my number 3 reason why you should be buying this stock, because the insane member growth has not happened yet. It is about to happen in 2024. Now, moving on to number 4, guys. This has been the biggest thing holding the SoFi stock back. You thought stock-based compensation had some bear articles. Destroys those bear articles for stock-based compensation, guys. We're talking about student loans. This has been going on since the pandemic. 3+ years of delays after Biden. I believe we got to about 8 or 9 delays from Biden. But finally, we got the debt ceiling bill, and it was priced in that student loans are going to be starting back up. And you can see this is an article from August 26, 2022. Decision on student debt may welcome a breakout. So guys, as you can see, what happened, this was a year ago. We were about to get payments started back up, and then we got 2 more delays from Biden. So this has been happening for years and years, but finally, but you can see SoFi actually did a lawsuit a couple of months ago, but now they have withdrawn the lawsuit to end student loan payment pause because President Joe Biden signed the Fiscal Responsibility Act of 2023, which ends the payment pause. So that was packed into the debt ceiling bill. And finally, guys, I mean, it took such a long time, but I want you guys to understand there's going to be massive profits coming in for SoFi very soon. We're talking Q4. And this is an article written by Chris for Data Investing on Twitter. And you can see, this article goes on for a while. It's about 10 pages or so. But he has the bearish baseline and bullish incremental revenue amounts. And we just want to look at the full year. The bearish is 139 million tacked on to our revenue for next year. 469 is the baseline, and bullish is close to $1 billion. This is massive, guys. This has been a 3-year delay, and SoFi is just looking to, put the cherry on the top to finalize a extreme profitable Q4 and a profitable full year for 2024. So this is huge. If we just get the middle tier, the baseline, that's almost 469, close to $500 million of revenue added on. I mean, that's going to increase our revenue growth by 20% with just that. Imagine the other business segments don't grow at all. I think there's a possibility for SoFi to grow another year next year at 40% growth or more. Banks don't grow that type of, speed, at 5 to 10% is what regular banks are growing. I think JP Morgan is the cream of the crop. They're growing at about 3%. So 40% next year would be insane. That would be 3 years of, 50, 35, 40, just awesome growth that we continue to add at these levels. I mean, we're talking SoFi is headed, to 500 million revenue quarters very soon. So growth might slow down, but still, we're going to be heading to $1 billion quarters extremely fast. So student loans is definitely the 4th catalyst, the 4th reason why you should be buying SoFi stock right now at these levels. If you made it to the end of the video, I want to say I really do appreciate it. I enjoy doing these videos for you guys. We've been covering this bad boy for 2.5 years, but I'm telling you, I believe SoFi stock is soon going to be breaking out once we turn that profit, and that is not that far off of the horizon. Be sure to smash the like button. Don't forget to drop a comment, and please subscribe to the channel. Let's try and get the channel past 15,000 subscribers. Once again, my name is Kyle. I hope you have a great day.